Hey, my name's Jake Nicholson. Welcome to my YouTube channel. In this video, I want to talk about the October bounce, or the lack of bounce in asking prices. You see, every October, what normally would happen is that the house prices, the asking prices, would start to increase. This also happens in the spring. Now, the reason for that is it's a good time of year to sell. What's happened is the summer goes very quiet. Everyone's away, so it's hard to get viewings. Kids are out of school. It's just carnage, isn't it? And so in the autumn, you get a bounce, because right now you could list your property, at least at the beginning of October you could, and get that transaction done and possibly move before Christmas, which is quite an appealing thing to a lot of people. But this month was different. While prices did go up, they didn't go up as much as expected. So that could have an insight into what we should expect with house prices in the next few months once we get the sold data. So in this video, I'm going to talk about what the expectations were, where we should have been this October and why we didn't get there, and much, much more. Now, if you're new around here and you haven't done already, do subscribe to the channel over there and hit that bell notification. We're on the way to 50. We're not on the way, we've made it. We've hit 50,000 subscribers, I'm sorry. And by subscribing, you'll get all the latest house price news, interest rate news, property investing tips, and much, much more. And let's get some views on this video. Your part's simple. Smash like, tickle like, do something to that like button. That helps with the YouTube algorithm, and that really does help the channel grow. So thanks to everyone that does that. So, October and the spring, as I said, normally house prices would go up, and that is because there's an influx of buyers normally at this time of year, and people want to sell their property and get moved to a nice new home in time for Christmas. So there's a lot of urgency on the estate agents, the solicitors, and everyone's trying to make sure all chains get done quickly. Now, it's quite a tall task to sell a house in 3 months, but somehow that magical Christmas date, the fact that everyone wants those 2 weeks off without any interruptions, does speed things up a little bit. So it is quite a good time to buy, and it's a good time to sell. So what happened this October was house prices, asking prices even, went up. They went up 0.3%. Now, if that was any other month, you'd say, that's good, that's not bad. And in fact, it does show market sentiment is still in the right place. We're not expecting a collapse in house prices anytime soon. You see, we've run this property channel now for nearly 4 years. And when I was talking about asking prices, in the middle period for about 2 years, every time I talked about asking prices, I'll be hammered in the comments. People would say, asking prices are irrelevant. This data is just useless. But I don't think it is. I think asking prices are very important because they're our crystal ball into market sentiment. You see, if there's lots of houses in Doncaster for sale in a particular area, Balby, where I've purchased, for 100 grand, but I'm coming into the market and I need to sell because I'm either going to get repossessed or I've got to get that money out for something very important, another purchase, a business fund, a tax bill, whatever. If there's an urgent need for me to sell that property, then I would price it at £95,000 because then all the interest will come to my property. And that isn't happening at the moment. So the new listings are looking at what's on the market and they're going slightly more expensive by 0.3%. So what would we normally expect in October? Well, a normal October bounce, as they call it, is 1.1%. So we've only got about 30% of that this month. And that shows that the market is slowing down. And there's a number of reasons for that. A lot of people, buyers and sellers, have just got a wait and see approach at the moment. You see, there's a lot of uncertainty in property, and that means that people don't want to complete transactions. There's lots of people watching this channel that have said, I've got a transaction going through at the moment. I don't know if either I want to complete or whether I should slow walk it and see what happens with stamp duty. You see, the budget next month is going to be one of the biggest budgets that we've had for decades. It's going to be brutal. We're expecting big tax increases. That might stop someone deciding to buy a property. Maybe they can just about afford a property right now, but if they know they're going to get hammered in tax, then maybe they stay where they are for a little bit longer. We also know that stamp duty, there's a possibility that we could pay it in installments. That could do the opposite. That could bring more people into the market because they feel that now it's a bit more affordable. I can spread the payments, buy now, pay later with my stamp duty. That could be a good thing for the market. Then you've got the property tax argument. Are they going to tax you with a property tax on an annual basis rather than stamp duty? We don't know what that will do in the market, but what I can tell you, they have that in America. It's not very popular, but because it's new here and a novelty, and you don't get this big upfront bill, maybe that gets people interested in selling property. And it also means that you can sell your property and move, and it doesn't impact you as much. You just change the banding on where your property tax goes, either up or down. That would make it easier to downsize. It would make it easier to upsize as well. So there's possibilities that that could positively impact the market, or it could stall the market totally. And so what this data shows us is that there isn't an influx of sellers at the moment, and there isn't an influx of buyers at the moment. And so when they're going to agents, they're pricing more realistically. And that's good if you want to sell. You need to price aggressively in this market because it is slow. I've got 4 or 5 friends in Surrey that have tried to sell their property in the last quarter, and all 4 of them have taken their property off the market because they're just not getting viewings. All of those properties are above 500 grand, and it shows that there is a slowdown in the market. So what does this data tell us? Well, I think that what this shows us, there is a slowdown in the market. And so these asking prices aren't going up as much as we were expecting and what normally would happen. And so what I think you'll see in the house price data over the next 6 months is a slight deterioration in those prices. I'm talking 0.5%, 1%, nothing major. I don't think you're going to see a crash. I think 2025 is going to end positive. You're going to see an increase in house prices. It won't be much. It'll be 1 or 2%, which isn't much at all. But I do think you'll see that. And I think next year, you'll see a pretty flat market again. Now, what that means is, in real terms, if you take into account for inflation, which is high, house prices have actually got cheaper. What will also happen next year is interest rates will come down. Some people's wages will go up, and that will mean affordability will improve for certain people, meaning the market at the back end of next year or 2027 should be primed to start picking up again. Let me know what you think about that in the comments below. Do smash like on the video. And before you go, if you haven't grabbed it, grab Mortgage Secrets, our new ebook. Nearly 4,000 people have grabbed this now. This will help you get it'll teach you to get the best broker, and it will teach you about off-market lenders. You can get all of those in here. It's in the description. It's in the first comment. Do also check out all the other content as well on the channel, including this video right here.